What's up, everybody? Jason Balin from Hard Money Banker, sitting next to me, Scott Freitag, Senior Loan Officer for Eastern Savings Bank. We are talking about real estate rental property financing for your rental properties if you are an investor. As you know, in today's real estate climate, it's hot. There's a lot of opportunities out there. And it seems to be a little bit easier to get some of the shorter term products because there's hard money lenders, there's private lenders for your fix and flip stuff that like companies like us, hard money bankers, we do, but we want to get paid back on a short period of time. So you really need some sort of relationship with a bank or an institution that's willing to partner with you on a longer term and do some sort of debt financing on these longer term rentals. Hence why Scott's here. So let's jump in real quick, Scott, and talk about kind of who the ideal client is of you, the ideal client, the ideal real estate investor coming to you to get a bank loan.
So for us, we work with the beginning investor that they're doing their first property, and we work with folks who have 20, 30, 40 more properties. So they're all ideal. They all come with different sets of challenges and uniqueness. So, but anything along that gamut.
And what do they need to kind of qualify for that type of product?
So one of the biggest things we get is it's a full doc loan. We're a bank, so we're going to require the tax returns for the last 2 years, pay stubs, W-2s. If you have a W-2 job, entity docs, but it's a full doc loan. Just like if you're going to get a mortgage for your primary residence, it's very similar documentation.
So qualifications, you're basing off LTV and debt service coverage?
Yeah, correct. Yep, LTV, debt service coverage are the primary drivers on these loans.
What type of LTVs?
So we can go up to 80% of the cost.
And then what about your debt service coverage?
Debt service coverage will go as low as 1.15. We have done loans that are less than that with compensating factors from a global cash flow perspective, or the liquidity that they have. We can.
And what about like credit requirements and things like that?
Minimum credit score 660. Got to have a minimum of 660. That's non-negotiable.
So let's talk about the magic question of what happens if someone doesn't qualify for that, but they have a really good project. Maybe they can bring on partnerships. In this day and age, a lot of people want to buy rental properties, and they should. It's a wealth building strategy. Everyone should have rental properties if they're up for the challenge. What are tips? What are tricks? What are ways to maybe reduce your risk by allowing some of these clients, some of these real estate investors, to finance some of these things?
Right. So there's a lot of different strategies that people can do. Sometimes it's bringing on a partner. Maybe it's a co-signer. Sometimes it's pledging another piece of real estate as additional collateral. So there's options like that. And I think we're not a traditional mortgage company. We're a community bank. So it's a portfolio lender. We have the flexibility to kind of carve out some like little niches as long as the deals make sense.
I'd like to think what you just said is you can look outside the box a little bit. It doesn't have to. Hey, if it doesn't have to be this, and this. Ideally, that's the perfect one, but there is some wiggle room because obviously, real estate investors, especially full-time real estate investors, it's not as cut and dry as a W-2. As having a W-2.
No, it's a lot of work pouring through the tax returns, and we're looking at if it's one property or if it's 2, 3, or 4 properties that we may be putting into a blanket. We're focused on the debt service of that particular collateral, but we also have to look at the 17 other properties that they have. What's that debt service look like, and how does that play into the whole picture as far as like the global cash flow is concerned?
Exactly. And I'm assuming that you're looking to build long-term relationships with clients. And
absolutely.
I mean, I'm familiar with some of the projects that you financed in the past. What type of areas work? I mean, do you want to do stuff that's just over $100,000? Do we do lower loan amounts?
Yeah, sure. We do lower loan amounts. We're not afraid of Baltimore City. We don't have any unrestricted areas. We don't have a minimum loan size. It's just got to be good common sense and make sense from a business standpoint for the bank. So I have no problem doing a $50,000 loan. East side, west side, as long as it makes sense and meets, all of our collateral requirements and et cetera.
Potentially it grows into a bigger loan with that same borrower, portfolio of loans. So what's the best way for them to approach you as a bank? They want to make application, they want to come in and see if they qualify for one of their properties. What's the best way to do that?
Sure. So we get the calls all the time, Jason, and I try to just preach to people, this is a business that you're running. Each property is its own little business, has its own expenses and cash flow. It's not a mortgage for your house where, hey, what's the best rate? But lay out the project, who you are, what you're trying to accomplish. Tell us about the property. Is it rented? Did you renovate it? Is it a subsidized tenant? Is it market tenant? What did you do from a renovation standpoint? Tell us the story, executive summary, if you will.
Yeah.
It doesn't have to be elaborate on a single-family row house in the city. It's not like a 27-unit apartment complex, but give us a little bit of story. Tell us who you are, and really tell us what we're looking for. How are we getting repaid? Not so much just focus on what the rate is.
Sure. One other quick question.
Yes.
Do these properties have to be stabilized already with a tenant in place, or can you go based on what the market rents are first? Because I know different banks have different philosophies.
Great question. And I think one of the niches at Eastern Savings Bank is we'll use future income. So it doesn't have to be leased at the time we're getting involved. We'll just have them sign we call it an undertaking agreement that it's a promise to do something at a later date. Which is to provide us a lease and proof of that. So
that's super valuable. That's super valuable. And to sum up a few things related to it, you need long-term debt in place. And unfortunately, you or someone else probably is going to have good credit and some sort of skin in this game. It's a business, right? The barrier to entry to get into real estate investing actually is a lot easier than some of these other business ventures, but it is a business and you got to treat it like a business. So make sure you got all your ducks in a row before doing it, because it's certainly a great wealth strategy, buying rental properties. What's the best way that everyone can get in touch with you?
I'll give them my phone number, my office number, or my cell phone. 410-568-6173 is the office, and my cell is 410-218-5308.
Perfect. Certainly appreciate it.
Thank you.
Thanks.